Stellar XLM is a cryptocurrency that many consider to be the main competitor of Ripple XRP. But to truly understand Stellar, you need to watch this video until the end, because I will cover the entire turbulent history of Stellar, and that information can put you ahead of 95% of people involved in crypto and finance. And even if you don't know anything, don't stress yourself, because every video on Bitcoin Academy is 100% beginner-friendly. To understand Stellar, you need to go back to 2014, a year when the crypto space was still in its early, chaotic phase. That's when Jed McCaleb, a key figure behind Ripple XRP, decided to part ways with the company he helped create. McCaleb had grown increasingly frustrated with Ripple's direction, particularly its centralized governance and focus on servicing large banks. He believed blockchain should empower individuals, not just institutions. So he teamed up with Joyce Kim, a lawyer and entrepreneur, to launch a brand new project, Stellar. Their vision was clear from the beginning: build an open-source, decentralized financial network accessible to everyone, especially people in developing economies who had limited access to banking. It wouldn't just be another crypto asset. Stellar aimed to connect the world's financial infrastructure in a permissionless and inclusive way. To support this mission, they founded the Stellar Development Foundation, SDF, a nonprofit organization that would guide the project's long-term development. This was a key difference from many profit-driven blockchain startups at the time. Instead of raising capital through a token sale or ICO, Stellar received $3 million in seed funding from Stripe, one of the most respected fintech companies in the world. From day one, Stellar's focus was on usability and impact, not hype. The network launched with a modified version of Ripple's codebase, but it quickly became clear that Stellar would go its own way. It wasn't about building for traders or speculators. It was about financial inclusion, low-cost transactions, and building a public infrastructure layer for money, similar to how the internet became a public layer for information. This founding vision laid the groundwork for everything that would follow. Stellar wasn't designed to compete for headlines. It was created to quietly revolutionize how money moves across borders. Every ambitious project faces a rocky start, and Stellar was no exception. After launching in mid-2014, the Stellar network initially used a forked version of Ripple's consensus algorithm, but that decision quickly proved problematic. Within months, the network ran into technical bugs, security issues, and poor scalability. The system wasn't stable, and confidence began to shake. Critics questioned whether Stellar was just Ripple in disguise. But rather than pushing forward with a shaky foundation, Stellar took a step back, and that turned out to be a defining moment. In 2015, Stellar introduced an entirely new consensus model, one that would set it apart from virtually every other blockchain at the time. It was called the Stellar Consensus Protocol SCP, and it was created by David Mazières, a Stanford professor and renowned cryptographer. Unlike Bitcoin's proof of work or even Ripple's early consensus design, SCP was based on a concept called Federated Byzantine Agreement, FBA. That's a mouthful, but the key idea is simple. Instead of relying on miners or a centralized set of validators, SCP allows participants to choose their own trusted quorum slices, forming a web of overlapping trust relationships. This creates decentralization, but in a flexible, permissioned way. The benefits? Fast confirmation times, low energy usage, and a network that could scale without traditional mining. It was a bold step, especially since SCP was peer-reviewed and academically published, staying true to Stellar's mission of combining rigorous research with real-world impact. Still, this wasn't an overnight turnaround. The early years were slow and often quiet, but by ditching Ripple's tech and building its own protocol, Stellar began to carve out its unique path. It wasn't about being a clone. It was about becoming a truly independent, purpose-driven blockchain for global finance. After rewriting its core protocol with the Stellar Consensus Protocol, SCP, Stellar entered a critical phase, building a stable, secure, and scalable foundation. These years weren't flashy, no price explosions or viral NFT drops, but they were pivotal. This was when Stellar transitioned from concept to actual financial infrastructure. The Stellar Development Foundation, SDF, focused heavily on protocol reliability and developer tooling. They improved the stability of the network, added multi-signature support, enhanced account management, and introduced features that made Stellar more attractive for real-world financial applications, like issuing custom tokens directly on the network. This wasn't just a theoretical upgrade. It opened the door for companies and fintech platforms to create stablecoins, loyalty points, remittance tokens, or even local currencies, all on Stellar's rails. And that aligned perfectly with Stellar's mission: democratize access to money, especially in parts of the world underserved by traditional finance. And then came a major turning point: partnerships. In 2017, Stellar made headlines by partnering with IBM. That collaboration was a massive credibility boost. IBM wanted to build cross-border payment infrastructure using blockchain, and they chose Stellar. Not Ethereum, not Ripple, not Bitcoin. The result was IBM WorldWire, a global payment system designed to connect financial institutions using Stellar's network. This gave Stellar a unique positioning. While others chased ICOs or experimental dApps, Stellar built relationships with banks, remittance providers, and governments. It was becoming the blockchain that traditional finance could actually use. During this period, Stellar also began working with companies like Tempo in Europe and Coins.ph in Southeast Asia, early examples of using blockchain for real-world remittances and mobile money. By the end of 2017, Stellar had done something rare in crypto. It kept a low profile, avoided hype, and quietly laid the groundwork for what would become a real-world payment network. As the crypto market exploded in 2017, Stellar found itself pulled into the spotlight. While Bitcoin and Ethereum grabbed headlines, Stellar's combination of speed, low fees, and tokenization tools made it a hidden gem for startups looking to launch their own crypto assets. It was the ICO era, and Stellar became a surprising player in the token boom. The price of XLM, Lumens, skyrocketed alongside the rest of the market, pushing it into the top 10 cryptocurrencies by market cap. Investors started paying attention, but what really set Stellar apart was its utility. While Ethereum dominated the smart contract space, Stellar offered a simpler and cheaper alternative for projects that didn't need complex logic, just fast, secure token transfers. This is when dozens of projects began launching tokens on Stellar. It wasn't just about hype, it was about practical, usable infrastructure. Stellar's design, based on fast finality and fixed low fees, made it ideal for companies focused on payments and remittances. The most high-profile partnership during this time? IBM's WorldWire, a cross-border payment network built entirely on the Stellar blockchain. IBM began onboarding banks and financial institutions across Africa, the South Pacific, and Latin America, using Stellar to settle transactions in near real time. This wasn't vaporware. It was a working system tested with actual banks. Stellar also gained traction with fintech companies like Satoshi Pay, which used the network for microtransactions, and SureRemit, which targeted remittances to developing nations. But despite the surge in attention, Stellar avoided becoming a hype chain. The Stellar Development Foundation stuck to its mission: enable accessible financial infrastructure, not ride market waves. By the end of 2018, Stellar had not only survived the ICO era, it had used it to quietly grow. While others chased speculation, Stellar kept building for real-world finance. After the crypto market cooled in 2018, many projects faded, but Stellar kept moving. Between 2019 and 2020, the Stellar Development Foundation, SDF, focused on turning its vision into practical reality. This wasn't about hype anymore. It was about real-world adoption. Stellar doubled down on remittances and financial inclusion, forming partnerships with companies that were already serving underserved populations. One example was Satoshi Pay, which enabled cross-border microtransactions and media payments using Stellar. Another was Tempo, a French remittance provider that used Stellar to power fast and affordable money transfers across Europe and Africa. In 2019, SDF launched the Stellar Enterprise Fund, committing up to $120 million to support startups building on the network. This fund aimed to boost innovation around tokenization, payments, and digital identity, critical areas for global financial access. Perhaps one of the most significant milestones came in 2020, when XLM was added to more major exchanges, including Coinbase. This gave users easier access to Stellar, especially in North America. At the same time, Stellar improved its wallet infrastructure, with tools like Lobster and Solar Wallet providing smoother user experiences. On the tech side, Stellar added more features to support custom asset issuance, multi-signature accounts, and compliance tools, making it more attractive for fintechs and institutions looking for stable, auditable platforms. But what really stood out was Stellar's approach. No flash, no drama. While many blockchains pivoted to DeFi or NFTs, Stellar stayed focused on being a global settlement layer. It became known as the quiet builder, not making noise, but building tools that worked. By 2020, Stellar wasn't just an idea. It was a functioning network with real users, real partners, and real value flowing through its rails. As other blockchains chased the latest crypto fads, Stellar spent 2020 and 2021 strengthening its foundation. This wasn't about keeping up with trends. It was about refining what Stellar already did best: fast, low cost, and secure payments. The network underwent several important protocol upgrades, all aimed at improving performance, developer flexibility, and regulatory readiness. One of the biggest milestones during this period was the launch of Stellar USDC, a stablecoin issued by Circle running natively on the Stellar network. This partnership enabled fast, dollar-denominated transfers across borders with near-zero fees. It instantly gave Stellar a competitive edge in the stablecoin game, especially for remittances and fintech apps. Behind the scenes, the Stellar Development Foundation continued to focus on enterprise needs. They introduced better support for multi-signature accounts, expanded asset control features, and optimized transaction throughput. These upgrades made it easier for regulated businesses to launch products without compromising compliance or performance. Meanwhile, Stellar deliberately stayed away from the DeFi mania sweeping through Ethereum. There were no yield farms, no meme tokens, and no complex derivatives. Instead, Stellar's message was clear: this is infrastructure for serious builders, not gamblers. The SDF also took regulation seriously. They released tools to help businesses with KYC/AML compliance, preparing for the increasing scrutiny facing crypto platforms. While many networks tried to remain in regulatory gray zones, Stellar leaned into becoming regulator-friendly, a decision that would prove valuable in the years to come. In a time when hype ruled headlines, Stellar's approach was disciplined, focused, and professional. It didn't try to be everything. It just kept improving at what it was already good at. In 2022, while much of the crypto world chased speculative gains or struggled with volatility, Stellar doubled down on its real-world mission: financial access. The Stellar Development Foundation, SDF, focused on turning blockchain from a niche technology into a bridge between traditional finance and underserved communities. The biggest headline came from Stellar's partnership with MoneyGram, one of the largest money transfer companies in the world. Together, they rolled out a global system allowing users to convert physical cash into USDC on the Stellar network and back again at participating retail locations. This was a game changer for the unbanked and underbanked, especially in developing countries. Now, people could access digital dollars without needing a bank account. But Stellar didn't stop there. It expanded its infrastructure with more fiat on and off ramps, meaning users could easily move between crypto and traditional currencies. That included integrations with mobile money services and fintech startups focused on remittances and microfinance. On the compliance side, Stellar continued to build a reputation as a regulation-ready blockchain. The SDF rolled out new tools to help partners integrate KYC, Know Your Customer, and AML, anti-money laundering frameworks, making it easier for licensed institutions to interact with Stellar-based assets. Stellar also began exploring the future of government-issued digital currencies. It launched research partnerships and technical pilots focused on CBDCs, central bank digital currencies, especially in collaboration with countries in Latin America and Africa. This wasn't just theoretical. Stellar positioned itself as a credible technical layer for nations looking to modernize their monetary systems. By the end of 2022, Stellar had made clear that it wasn't just building for crypto enthusiasts. It was building a financial backbone for the world's overlooked and underserved. By 2023, the crypto spotlight was firmly on Ethereum's Layer 2s, Solana's speed, and the DeFi and NFT hype across multiple chains. Stellar, by contrast, remained mostly under the radar. But that doesn't mean nothing was happening. In fact, Stellar was quietly expanding its global utility. While other platforms battled over total value locked or NFT trading volume, Stellar focused on financial inclusion. The network continued supporting cash-to-crypto corridors, especially in countries where banking infrastructure is weak. Projects using Stellar offered citizens access to dollar-backed stablecoins like USDC, helping protect their savings from local currency inflation. Still, concerns emerged around centralization. Most validator nodes on the Stellar network were still operated by the Stellar Development Foundation or affiliated partners. While the Stellar Consensus Protocol doesn't require mining, critics argued that true decentralization hadn't yet been achieved. The SDF acknowledged the issue and outlined plans to encourage more diverse validator participation, but progress was slow. Stellar also stood out for what it didn't do. While other chains embraced DeFi, meme tokens, and NFT marketplaces, Stellar intentionally stayed away. There were no major NFT platforms or yield farming protocols built on Stellar, and that was by design. The SDF believed in a focused approach, aiming to build stable, compliant infrastructure for payments and asset tokenization, not the speculative side of crypto. As a result, Stellar lacked the retail buzz of its flashier rivals, but it was gaining ground in quiet, meaningful ways, particularly among NGOs, financial institutions, and governments interested in blockchain for practical use. Not, in short. 2023 showed Stellar's biggest strength and weakness. It wasn't trying to be the next crypto trend, it was trying to build the next generation of financial plumbing. By 2024, the regulatory environment around crypto had shifted dramatically. Governments across the globe were clamping down on unregulated exchanges, privacy coins, and DeFi protocols. Many projects struggled to adjust, but for Stellar, this new era played directly into its long-term strategy. From the beginning, the Stellar Development Foundation, SDF, had prioritized compliance, transparency, and partnerships with traditional institutions. That approach now began paying dividends. As regulators cracked down, Stellar stood out as a regulator-friendly alternative, a blockchain built not for speculation, but for financial infrastructure. This year saw a growing number of central bank digital currency, CBDC pilots exploring Stellar as their underlying network. Several emerging market governments began experimenting with issuing tokenized national currencies on Stellar rails, attracted by its simplicity, compliance features, and real-time settlement capabilities. Meanwhile, SDF continued building out compliance tools. KYC and AML layers were being baked into wallet and on-off-ramp infrastructure. Stellar-based fintechs could now offer user verification directly on-chain, making it easier to meet government regulations while still preserving the benefits of blockchain. Though Stellar still lacked a fully featured smart contract system like Ethereum, the network introduced limited scripting capabilities to enable programmable logic for things like payments and asset issuance. This allowed for some customization, without opening the door to risky, unaudited code that plagued other ecosystems. Most importantly, Stellar stayed focused. It didn't chase hype or pivot toward the latest trends. Instead, it positioned itself as a trusted backbone for regulated digital finance, appealing to NGOs, banks, and financial institutions looking for scalable, compliant blockchain rails. In 2024, as much of crypto was scrambling to adjust to new rules, Stellar was already there, quietly thriving in the world regulation had built. By mid-2025, Stellar isn't making headlines with explosive growth or billion-dollar meme coins, and that's exactly the point. While other chains chase hype cycles, Stellar has matured into something else entirely, a stable, specialized, and globally respected financial layer. Its mission remains laser-focused, to power fast, affordable cross-border payments and support the tokenization of real-world assets. This clarity of purpose has made Stellar a trusted name among governments, NGOs, and fintechs working in emerging markets and underserved regions. XLM, Stellar's native token, continues to play a vital but modest role. It facilitates liquidity and serves as a bridge asset between currencies, not as a speculative investment, but as infrastructure. As a result, price movements are relatively calm, and XLM sits comfortably within the top 25 cryptocurrencies by market cap. The network has also gained traction in CBDC projects, with at least 2 central banks running pilots or production systems using Stellar rails. This includes programmable payments, remittances, and government-to-citizen disbursements, all executed quickly, cheaply, and with regulatory oversight. What Stellar lacks in DeFi and NFT ecosystems, it makes up for in reliability. Developers working on payments, compliance tech, or humanitarian aid choose Stellar for its uptime, simple tooling, and active support from the Stellar Development Foundation. Funding is steady, documentation is thorough, and corporate partners feel comfortable engaging with the network. Critics may still call Stellar boring compared to flashier blockchains, but in a post-regulation world, being boring is a feature, not a bug. Stellar isn't here to reinvent the internet. It's here to upgrade the financial plumbing of the real world. And in 2025, it's doing exactly that. And now, you can proudly say that you know about Stellar more than 95% of people. If you want to up your crypto education even more, make sure to check one of these 2 videos you see on the screen right now. I hope you found this information valuable. If yes, don't forget to like, subscribe, and leave your thoughts in comment section. Best of luck, and see you in my next videos.